I sold all of my longer term positions today and I'm actually now net short. One of the greatest things that I can do as an investor is change and adapt to when the data changes. And the biggest mistake that I've made in the last 3 weeks is, and as I've shared with you for months and months and in much more detail with my members, I have seen us come closer and closer and closer to the beginning of this bear market. And I think it's absolutely possible that we're in a bear market right now. The mistake that I made is that I pushed the limits too far. I didn't even start to get out towards what my data was pointing to, that the bear market could be ending at any time. Now, again, I'm not going to get it absolutely perfectly. That's my goal, but I didn't get it perfectly. But here's the great thing. If this is anywhere near the beginning of the next bear market, well, I get it. Okay, the S&P 500 was down 9%. Well, if by the end of the bear market, the S&P 500 is down 40%, well, in relative terms, I did a hell of a great job, because if we go from 90 to 40, and it won't happen in a straight line, but I am saving all of that cash at worst on the sidelines. Its purchasing power goes up for every percentage the S&P 500 falls. And someday, if I am right, when the bull market starts back up again, I will have saved tons of my cash and my money to be able to put back into the stock market, in my favorite stocks, at much lower prices. That's how people become rich. I realize I have not done this perfectly, but maybe with some hindsight, a pretty good job. One of the other things happening here is, remember over the last, not even maybe quite week, I have said there has been a silver lining here to this fear. Well, the silver lining is largely gone. The positive divergences between the underlying data in the stock market, between where it is right now and where it was more fearful at the end of July, when that late 2024 into 2025, when that correction ended, that positive divergence is shrinking. And I was also sharing with you that the 1 month and 1 week buying here in the stock market, here's the 1 month, and you can see for 1 month, literally everything is down. Remember, just a few days ago, I was sharing with you that there were pockets where people were buying mainly defensive and real estate stocks. Well, that has been wiped out. And over the last week, more or less, there was only fractional buying. Everything is being sold. When everything is being sold, it is one of, I get it, many signs that the bear market could be here. So be very, very careful. We could be in a brand new bear market. I do not say that because of the really nice correction that we've seen over the last 2.5, almost 3 weeks. I say that because of all of my research that for months and months and months told me it was building, and now more of the confirmation. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. Specifically, here's the NASDAQ 100 QQQ, albeit as of 2:40 this afternoon, and as of 3:05 this afternoon, it's a little better than it is right now. But still rocking the unconfirmed breakdowns below about that $480 share level and the $475 a share level. If we can't break out of this, prices could absolutely fall further. Remember what I've also shared with you over the last week or so, that the fundamentals really aren't changing. Again, there's really no break in the tariff war. I get it, late mid this afternoon, there was some news that came out about some stuff that could absolutely be construed as positive as far as a process of ending the Russian-Ukrainian war. And in my opinion, that's what popped up the stock market mid-late this afternoon. There was also a tiny bit of news that I can't quite remember that was a little bit good news about something about the electricity and the tariffs in China. I get that. But otherwise, the fundamentals aren't changing. And until we get to a price point where buyers are energized enough to come in, which could mean we even still need lower prices, watch out for lower prices. Now, I'm not saying that in a bear market that there can't be bear market rallies. There absolutely can be. And if I think we are coming into or having a bear market rally, sure, I will exit my short positions and who knows, maybe even nibble and go a little long, but with holding tons of cash now and actually being net short, I am so nimble right now, I can go with this market either way. I exited my crude oil position today. I did at a fractional gain, so I'm still happy. I didn't like how it popped up a lot this morning and then slowly came down the rest of the day. I said, let me get out at a gain. I am still in my Bitcoin trade, which as of 2:35 this afternoon was doing pretty well. I think if we can get back up to about that $90,400 a coin level and break and confirm above, that would be very bullish. If we get back up there and stall again, this time I could exit my Bitcoin trade. So a little patience on Bitcoin. Back to the general stock market real quick, and I understand this data is as of 2:15 in the afternoon, but with the underlying data in the New York Stock Exchange and the NASDAQ 100 being very weak, I do not trust the little bit of buying that we've seen late this afternoon. And somebody said in my comments yesterday that yesterday was a one-sided 80% down day. It was not, which tells me it's possible to have more selling in the short and immediate term. Be careful. Tomorrow and Thursday before the bell, we get some inflation data. We get consumer level inflation data tomorrow, wholesale level inflation data on Thursday. And I just don't see this. I can be wildly wrong. I don't see CPI or PPI sending the market a lot higher because normally in a bull market, if the inflation was lower, that would have been good because it would have made people think, okay, the Fed will cut interest rates more and everybody likes cheaper money. Why wouldn't they? And that's bullish. I get that. But if I am right, and if we are in a bear market, a slowing down of the inflation rate, I get it. It's good for you and I in general because we like lower prices, but it's not good for the economy. It could show a slowing, a even further slowing of the economy. And you already know, right? Look at the kitchen table issues. We have probably been in a very mild recession for at least a year and a half. If it's getting worse, that's not good. Listen, I can be wildly wrong, but if you still think that we are in a healthy bull market here, you might be in for a lot of pain. My opinion, we have started recently a bear market, which doesn't mean every day, every week, or even every month, but it means generally lower prices. I would be very, very careful. If you need help, reach out to me.